on Thursday, we went live, and it was right before we went live that the infrastructure deal made another giant leap forward, and that was the Senate, essentially, members of the Senate from a bipartisan, whatever you want to call it, bipartisan. The Democrats and Republicans came together and then went to the White House and basically presented Joe Biden with the deal, $1.2 trillion. Joe Biden said, okay, let's move forward with this. And the breakdown here, it's pretty extensive, but what I will say is that I think that the breakdown is actually pretty good. Transportation, roads and bridges are among the biggest chunks of this, which I think that everybody can agree are very widely needed. The other ones that were interesting that I thought that didn't get enough money, which I was very surprised about. EVs, $7.5 billion out of $1.2 trillion. Now, $7.5 billion is still a lot, but it just seemed like to me that didn't seem like, from all of the talk that we heard, it seemed like it was probably going to be a bigger chunk of that. It was not. Electric buses and transit also $7.5 billion, which is not really that significant when you compare it to everything else. So yeah. I was a little bit surprised about that. Airports, though, was a big one. I thought was $25 billion going into airports. So some pretty interesting stuff here. I think it's a really good that we're at least moving forward with this infrastructure bill, because everybody has complaints as to where the money gets spent, and I get that, but I think that there's a lot of money going into really important areas, and I think for me that's just how I'm taking it.
Yeah, I mean, you got to remember the original infrastructure bill was nearly $1 trillion. It was $973 billion. So
yeah.
You got to figure they almost cut that by half. It's got to come from somewhere, but I'll agree that the EVs stood out to me most. $174 million was in the original proposal.
Yeah.
And what this speaks to is really it had to pass through the Senate.
You said 174 billion?
Million. So 174 million.
Okay.
And it ended up being 7.5 million. Million. Oh, sorry. Is that billion? I'm sorry.
This is 174
billion. No. It's billion.
Okay. With a B.
So 174 billion, and it ended up being 7.5 billion.
Yeah.
And
it's quite a drop.
It's a huge drop.
Yeah.
It's a huge drop. And I was in ChargePoint. I'm in ChargePoint in the public trading account simply for that run. And it's already, my position's up 30%. And now I'm kind of on the fence. What does that mean for my position? ChargePoint should still benefit and these EVs should still benefit. But does the market look at it like what could have been 174 billion or what is 7.5 billion? And you got to chop that up between the Blinks, the ChargePoint of the world. That worries me. And it's just unfortunate because it's a product of the way the system's set up. Obviously, the Senate has to pass, and it's a lot of Republicans. And so EVs typically are Democratic states. It's just a reality.
Yep.
Cities are going to be more pushing for EVs, major metropolitan areas. And so to get that support, they massively cut that. And that's a shame.
It is. And I mean, I think
just for my account, it's a shame for my account.
Some people could make the argument that perhaps, whatever, we don't need them. It's the demand for electric vehicles is going to take care of itself, whether they have help from the government or not, which, you probably could make that kind of argument. But charging stations in particular, I don't know how many charging stations you're going to be able to get out of $7.5 billion. You're probably not going to get many as far as the support was. And that's what was the primary focus from the government. So we'll see. But I agree, man. I think that there's definitely a little cause for concern for anybody who is in EV related, especially charging stations, investments. So that could definitely impact in the long run. And obviously didn't seem to impact it on Friday too much. So maybe it just doesn't matter. And like we were saying, maybe it just takes care of itself. But yeah, it is kind of like a big head scratcher. What I will say is, and I've talked about this, the amount of money that's being spent on things like roads and bridges, the airports, even water infrastructure, all kinds of stuff, passenger freight and rail, there was $66 billion going towards. Steel, man. We've been talking about it for months now. Cleveland Cliffs doing really well. X Steel, all of those, the materials plays are going to continue to do well, I think, because of all the money that's being put into there. Now, somebody might make the argument that, it's already built in. But this is significant. I think it's just getting started to a certain extent. I don't think we're in the early stages of the movements of some of these material plays.
Yeah, and I think the more important question that I have, because anything is speculation on this.
Yeah.
is what does that mean towards this week for your trading? So does it impact positions you currently have? Will it impact positions you want to get into? What does it mean, and what are you looking at based on this as far as the stock market's concerned?
Yeah, so I mean, I already mentioned the steel plays, but there's the other stuff out there too. I mean, we've talked about Spirit Air Systems a lot, and I think that that's going to be one that it gets overlooked and it's lagged a lot as it relates to the.
But what does it mean for you? Tell me how it changes you this week.
So I'm not going to necessarily add to my Spirit Air Systems just because I have so much of it, but Cleveland Cliffs definitely looks like a good opportunity to hop in on any kind of weakness, because I think that the chart itself looks great, but also with the amount of money that's coming in, it's going to benefit somebody like them. I think it would be a really good opportunity for me to add on any kind of weakness this week.
So would you say where Spirit, what it means for you is you have no intention of leaving Spirit?
No, I'm going to continue to hold that. I mean, if you guys don't know, the company is directly related to plane sales with Boeing and that sort of thing. And if more money is going to go into airports, I think that they still stand to benefit greatly from that. Industrials, all those.
So Cleveland Cliffs and Spirit for you are the ones that...
Oil plays too, man. I mean, you're going to need oil to get all this going, at least in the short term.
So you're going to add oil, or you have oil?
I have plenty of oil. I have the oil services, which is OIH, is the ETF. And then I also have Marathon Oil, which is just a straight up oil play. So I'm not planning on selling any of those. I actually ended up adding to those into weakness, not this past week, but the week before, with all the craziness going on with the Fed and the quad witching and stuff. It gave me a huge opportunity to add to those. And now with the infrastructure bill coming out, just gives me a lot more conviction. And I think that there's plenty of meat on the bone here for those.
Yeah, and Elise Brown says Alcoa. I think when you're saying A, you're talking about Alcoa.
Yeah, some materials.
Which is what I'm in for aluminum. I did add to that on a pullback, and that ended up working out because I think it was up like 8% this week. Yep. But this is another thing, and I just want to be transparent because this is one thing we've talked about offline, and that's why I'm kind of pushing you and saying, what does it mean for you? Yeah. I don't care about we get ourselves in trouble when we set ourselves up for unwarranted heartache when we start generally speculating. Yeah. Like, nobody's going to argue with us on what we're going to do. And so what I'm going to do, kind of similar to you, is the one thing we've done is we're already in things because we've been anticipating it. And so you got to take it with a grain of salt, because our strategy would be different if we were not in something. And now, because of the infrastructure play, we've talked about it, the market's a forward-looking vessel. So you probably should have been in on this stuff because you could have benefited off the move. Alcoa, I'm staying in it. I've already averaged in. So what this means for me in Alcoa, really long-term confidence over the rest of the year. So I'm not going to touch my Alcoa. I have a liberal stop set on it, but my hope is it continues to uptrend. I also have, for the airlines, I have Delta. I'm full position there. I have no intentions of selling that now. I mean, travel in general is up. But the other one was 3 stocks that I'm looking at. So ChargePoint, it does confuse me. And I mentioned that earlier. I won't get too much detail. But I do need to figure out what happens with ChargePoint, because I think there's still room to run with it. But I'm just unsure about that $7.5 billion. But Caterpillar and Nucor, when we talk about, we have a dividend bot, our dividend trading bot. Yep. That's a dividend aristocrat. And while it doesn't have a great yield, it's like just under 2% yield. And dividend aristocrat, it's been 48 years of consistent dividend and consistent increase in the dividend. Nucor may be one where, while it may not have that 3% that we always look for, it has good upside. Yeah. So, not personally, but for Nucor, are you familiar with Nucor? Yeah. So for you guys out there, steel, they're the largest manufacturer of steel in the U.S. Also in North America, they're the largest recycler of steel. Yep. When you got to consider the constraints that we've had with the supply chain, somebody that's a recycler definitely should benefit off of that. So Caterpillar, ChargePoint, and Nucor were the ones that are probably going to impact my account. I may get in Caterpillar, but other than that, I'm holding on to the infrastructure plays.
It's crazy that people look at Caterpillar and they're like, oh my God, how can it go higher? And it's just like, it can go a lot higher from here, even though because a lot of the reasons why it's gone up so far, at least in the last 12 months, has been their exposure to China.
Yeah.
And now this coming in,
Yeah.
Caterpillar can certainly go higher from here.
Yeah, so we've talked about diversifications. I'm really proud of the way we've handled it, and it's played out really nicely for
Yeah.
both of our accounts and
Yep.
our community in general.
Yeah.
So that's really excited.